Hello, and welcome to another day of TA the Degen way. I just wanted to hop on and do an update on yesterday's video on this Bitcoin macro levels chart, where we've taken these levels and drawn them out using the volume profile tool in some very specific ranges. My intention yesterday was to go through this video and break down how some of this stuff was put together, and I've made a few additions to it. It gets kind of crowded the farther it goes out, and I don't recommend ever having this much stuff on the chart. And just for a quick update from yesterday before we hit the delete button, and I just want to go through some of these things and show how I put this together. Here we've taken this is the weekly chart for Bitcoin. I am trading on BingX, so that is the chart that I have up. Doesn't go back nearly as far, but certainly has the modern price action. But here's our upper range. It's approximately 100%. We've used the rectangle tool, and it's approximately 70 weeks long. And that's how much time price spent inside this price range, and it's about 100%. If we come down here, we have a range that is also equally 100%, and assuming that price will range approximately 70 weeks, we've copied and pasted that box down here. And what I've done is we've taken the fixed volume profile tool, and we'll go through all this step by step in just a minute here, as well as take a look at the Bitcoin price today, what it's doing, somewhere later in the video. But we've taken the fixed volume profile tool after these ranges are laid out, and just taken the volume profile of this section. You can see it gave us a value area high of 48K, point of control or high volume node. This is the point where the highest volume was traded in this range. You can see it's this support, it's this resistance support flip area, as well as down here we filled it in quite nicely. And then down here we have our value area low. Done the same thing for this lower price action block. This section again is just a copy and paste of this rectangle, and as you can see, we have right at the end of our same time frame had a nice weekly breakout, nice engulfing candle to the upside. That's called bullish, we'll see where it goes. We've also hit our last support resistance and appear to be kind of rejecting, or at least cooling off. And granted, this is the weekly. And if we pull up our oscillator, see we've got our green dot, and price is starting to push up. Money flow is just barely starting to cross in the green. And as you can see, these two RSIs here are quite gapped still, and they don't appear to be getting closer together. This yellow line they call VWAP. It has nothing to do with volume weighted average price, but the farther this yellow line gets away from the zero line, the middle, that is the farther these two RSIs are gapped. You have this light blue wave and the dark blue wave. Light blue, dark blue. And the closer these start to get together, when they pinch off, that is when you get a red dot at the top, or when they're crossing to the downside. And as you can see, if you watch this yellow line, as it's getting closer to the zero line, these two are getting closer to crossing. And what that's telling you is, even though these haven't crossed yet, that it's getting close to them actually crossing. Or we can see if this was to curl and start to curl down but not actually cross the zero line, what that's telling us as this starts heading downward, that these two RSIs are getting closer. Well, right now we're down here, and these two RSIs are only getting farther apart. Bullish. We haven't started to cool off and go sideways really at all. But back to this chart, what else did we have? We took the, once we had these levels laid out, we took the average pump, which is about 50%. Apply it here, pretty much just a measured move. And if we do the same thing from our current price action, it brings us to about the point of control at about 39K up here, and you can see where are we rejecting and where do we put this double top and break this mini uptrend. Well, at the value area low of this upper range. See, our lower range, our value area high, is way down at 23K, which is why there's always certainly the possibility that we put in a B, and a C, which, you know, this same move, it's about 20%, I got it right here, brings us from our current price, if we were to reject at the exact current price, which is our support resistance flip at 28K, that brings us exactly to the value area high of our lower price range, which instead of this, we would be looking at something more like this, where price comes down, hits the, this is again the same 70-week box, it comes down, hits the 23K area, and then pushes on up to 39 to 43 or even 48K. A nice big run. But we do have nice curvature on this price action, and for now we are still, until we actually reject and start coming down, maybe get some bearish divergence or something, for now we are actually still up here. But if we want to take this price action right here, this low, and what do we get? Matching these lows, we get our value area high. And I want to point out a couple other confluence things, what these curves are. These are actually just portions of a circle, and the circle is just an arc inside a square. And when time and price are square, trends change. What does that mean? Well, when price is square, that is when you've had price rise versus time happen very quickly, and then it loses momentum. The trend is exhausting and it turns sideways. It's not going up anymore, it's going sideways. And when time and price, you can see the curvature in the price action. And when time and price are square, when this is at the culmination of this curve or very close to it, you get a reversal. And here, if we follow this down here, follow the curvature of this price action, when time and price were square, we got a reversal. I'm not going to spend a lot of time on that, but what I do want to do is we want to get in here. We want to rebuild this chart and go over a little bit of just market geometry. I see very little about geometry on charts. I mean, geometry is nothing more than a visual representation of some mathematical relationships or just averages. You know, how long did price trade in this window? Well, about 70 weeks. And how high did it go up? About 100%. Our chart is a X and a Y axis of time and price. So here we're on a log scale. That's showing us the change in percentage versus time, and how much did it go up? I mean, what's the average size of this right here? Well, it's 100%. And how long did price trade in this sideways range? Approximately 70 weeks. So, I mean, we can use geometry, a rectangle, to, you know, play around with that on our chart. And the circle, we'll get into that in just a minute. So here's what I want to do. I want to hit the delete button, and we're just going to rebuild this together. But before we do, why don't we zoom in and take a look at the very local price action. So if you've been watching this video, well, then you get the daily market update, and we will keep this quick. One thing I see right off the bat is we got some curvature in the price action, you know, and when time and price are square, the trend will change. Well, is it going to change and get into a steeper uptrend? I mean, price can trend up, it can trend sideways, or it can trend down. We also have very nice curvature to the upside that we are right at the bitter edge of. You know, if we were to take our circle tool and let's pop out to the 4 hours so we can see more of our chart. I mean, this here is about square. Either we're going to get one nice blast off pump that pushes us up into here where we want to get. So now when we pull back, we can pull back to these levels again. You got this high, resistance, resistance, support. And what we want to do is we want to push up and flip it back into support. Just a quick use of the circle tool. Why is circle? This will help when we rebuild our macro chart. Well, a circle is nothing more than a plot on a graph where there is an equal distance to one fixed point. A circle is also something that, this is also a square. I mean, if we were to just take our square tool down and over. The only difference between using this and a rectangle is this is taking into consideration our rate of change in percentage of value of time versus price. And when time and price were square, folks, the trend changed. It's a nice ABC there, but we came down and we tested this as support. We've pushed up. Now the question is, are we going to come in for our next wave and get up to, I'm looking for 29K, 28,750, right in that area. And if we take the same rate of change and we apply this to our current price action, there's no perfect science to this, but we're looking for some correlation. We want it to match, and then we want this outer edge to be where we got a change of trend. Well, look at that. Boom. So when would this trend be square? Well, it would be square at 30K, which would be beautiful. One nice big blast off to 30K. And to be honest with you, it's gonna get front run a little bit, and if we find the center of our circle, just about right there, pull this line up, we can see the reason I like to use the circle is because now we can split this up into equal increments. Because what is this circle? It's a plot of values that all have a equal center. There's a mathematical relationship between these. And where did we get this circle from? From our trend over here. It's our rate of change in value of time versus price. We're just applying the same values in a visual form on the chart, just using simple geometry. So now if we were to split this up evenly, we'd go in 15-degree increments. You got 90 degrees, 75 degrees, and here's 75. Comes out right at our support and resistance. And I couldn't make this up if I tried. It's just a mathematical relationship between time versus price. The average rate of change in value, whether it be up, down, sideways, whatever it is. So we had 90, which is our high. We have 75, our support resistance. Watch how we get each level. Let's go to 60 degrees. Brings us out at these lows. Ooh, pause for a commercial break from our sponsor.
It's a way to give your beauty MDs a second life. A way
Beauty.
to help end packaging waste.
She is a beauty.
Can I recycle this?
Oh.
This is a beauty repurpose box at Sephora. A simple way to close the
Wow.
loop on difficult to recycle MDs. Even the ones you didn't buy at Sephora. Just clean them out.
There we go. See you later. 60 degrees. What happened at 16 degrees? At 60 degrees? Well, the bottom. Now let's go down to 45 degrees. And, oh, resistance. Resistance. It's our current support resistance flip we're sitting on. Let's go down to 30 degrees. And what do we got? Support. Let's go down to 15 degrees. And what do we have at 15 degrees? These lows over here, these highs, right? I mean, this 15 degrees pretty much right on the money right there. the last line of defense. And you have the full square. What is this? When time and price are square. Or we could draw it over here. And what is this level? It's 22. Let's get her nice and straight. It's about 22,100. Excuse me. And what do we have? Support, resistance, flip. All key levels. And if we were to draw these equally over here, we're just going to do a couple of them. Let me just throw on these ones. I may have scrolled. Nope. If you scroll at all, you're changing the aspect ratio. And I like to just keep it nice increments of 15 degrees so I don't scroll up and down on my chart. But now what I want to do is I want to draw these the other way. Let's go to 45 degrees. Let's match that from over here. And just to show that it's truly 45 degrees, let me get a couple of these on here and we'll draw them backwards. I bet this is 60. Couldn't make this up if I tried, you know. I mean, this is why. It's because there is a mathematical relationship between time versus price, and it's really very simple. It's the same money moving in and out of the market, and there's slight changes and variations based on new players coming in. These are averages. This is the expression of time versus price. The chart is the final culmination of all buying and selling, folks. Every decision ever made, and the reason, whether it be news, peace, love, war, fear, doubt, and greed, or whatever it is, whatever drives those decisions. We could sit around and we could learn about it all day long and, you know, look for their existence. Or we could look at the chart and how these things express themselves on a chart and how can we use that to our advantage. Look at this curvature. And when time and price were square, the trend changed. Look at this curvature. When time and price are square, the trend will change. And let's just map it out. So let's get our 60 degrees over here. So 60 degrees is right here. Let's bring this up to match. So we should have a significant price level here, which of course we do. And we should have a significant point in time here, which is right where we could have came down and rejected. And we chose to come up and put in a bullish flag. I bet if we went 50% of the way in between here, we'd even have other key levels. This distance right here, 50% of the way, when price moves, it goes, see, well, what is this giving us, these levels here? It's giving us ranges. Let's do some more market geometry. Let's do a square. Let's go from this level to this level. That is this range right here. You know, it's a little too small for that one. I mean, that's when price gets up into this range, it's going to be much tighter. Why? Because the trend is slowing. This is its rate of, it's diminishing in its rate of returns. That's what that means. It's a mathematical relationship between time versus price. Let's do some more geometry. Let's grab from here to here. And that was this price block right here. So it would be from right there to right there. What do you got? I mean, you couldn't make this stuff up if you tried. And where did this circle, this radius come from? It was this trend. It was from swing high to swing low. And we're going to be able to do the same thing right here. Going up this way. So this is 60 degrees. Let's draw our 75 degrees on here. And see how this has given us key price levels. Here's 75 degrees. Imagine that guy. And what I want to show with this now is the time aspect. Notice how right here we're right at the trend change. Right here we had a major change of trend. We came up and came right back down. When would our next major change of trend be? If we follow this all the way to the top, that would be at approximately 29,750, which would give us a higher high on that chart. No, that's up there. We already got an uptrend. But what point in time? Well, it would be about 1900 hours on October 25th. Just saying. And let's split this up into increments, being all this stuff seems to be so mathematically perfectly proportioned. About 50% of the way is October 15th. This is why I'm calling for a pump that will end somewhere in the middle of October. About right here. At about, 29K to 30K. And somewhere between October 15th and October 25th, October 30th. And if we come up to 90 degrees, we're looking at, this is where we're hoping to just get a pullback and continue on our way to the upside. So that was extra. We need to go back to our weekly chart, and we are going to very quickly build this thing using some of the techniques that we just used with rectangles and circles, and figure out how can we forecast high probability levels using past price action, which is not something that can be used to inherently just predict the future, but it is the only thing that is available for analysis and forecasting. And by analyzing the price, and the relationships between time and price, and how, people act and react to whatever's going on, it expresses itself in the chart. I don't think it could be made any more clear, but we're just going to go ahead and we're going to hit the delete button. This is our target chart here. And let's do some geometry. So here we have a range. Here we have a range. And what we're going to do is we're going to grab our rectangle, and we are going to flip to our line tool. Now I consider this out of the range. This was a liquidity grab. It broke out of the range, came right back in it. So we're going to go from, we want to catch the first spot that prices in this range with this as the high and with these as the lows, and we want this to end right where price left the range. So what is this telling us? This is telling us how far price ranged in this time period and how long it was. We can take our tape measure tool. We're on a weekly chart. 71 weeks. I keep saying 70, but it's close enough. And how far did it go up in this range? %. If we go to the top, 106%. So really, we got, and I bet if we included this teeny little blip there, that would be our 100%. But now let's take this. Now this is one range. This is our upper range. I'm going to copy it and paste it. I just hold down the control button and press C and then press V, or else you could just right click this, and I'm sure there's a copy. Yep, copy or clone. I just click copy and then, clone. Either one I'm sure works. So now let's draw this. Let's drag this over. And we can see how it matches our price action perfectly. Price broke below the range, came back up into the range, and now is on its way. And if we take this here and we consider, let's move it over one tick, because this week would have been included in that block. Now we got a little gap. Let's see if we can move her over with the arrow. There we go. Well, no, that's still right on the same week, but regardless, we're talking about one tick. Let's delete our Wheel of Fortune there. You never know, that might have been what W.D. Gann was talking about when he described a water wheel in his invention, that how he talks about making a bicycle that rides on water and has wheels like a barge. Equal divisions of time and price with a rate of change taken from price action on the chart. Let's bump this over one. So price has managed to stay in this 100% range, and we have left the 70-week mark. We have a green dot on the weekly, heavily oversold and pushing upward. We are in an uptrend. We came up our full 100%. We broke our minor trend, and we retraced 1/3 of the way. We have nice curvature to our price action, and we are, approaching heavy resistance. This could very easily come on down. We could follow this curvature, this trend, and expect a rejection right in here, come down to 23K and move on up. Or we could just push on up, find support, range a little bit, or maybe we just blast off. But here we got these two ranges, and now what we're going to do is come up to indicators, and we're going to grab our fixed range volume profile tool. Just type it in there, fixed range. What this allows us to do is it gives us the volume profile of a very specific range. Rather than all visible is going to give us the whole thing. We just want to know what was the significant values in this range, and I've modified this ever so slightly by changing the inputs to row size of 200. That gives us much more data here. And if you come to style, you can turn on your value area high and your value area low. So this is giving us the this is like your RSI, your value area. Anything above it is overbought, anything below is oversold. But this is the key levels in this range, so we can mark them out. When price was trading in this range, these were the key levels. Here's the point of control, and here is our value area low. We'll change them to match. And now let's do the same thing for our lower range. What's our significant? If price comes up into this range, where would we expect it to go? To the point of control, the highest volume node in this price range. This is where, the most volume was traded in this range. And hopefully come down, retest, and come on up. Or maybe we come on up, come on down. And then let's do the same thing for this range. Let's come up and grab our fixed range volume profile tool. And let's start it right where our range began. Drag it out to the end of our current price action. So if we get a pullback, what was the value area high in this range? Well, it's about 23K. Value area low is 16K. And our point of control, or our highest volume node, is all the way down at 17K. Pretty low. But we also got some other volume spikes here. We got a volume spike at 19,250. We got some heavy volume here at 20K. You got some heavy volume when you look at these big shelves. There's no real gap here. I mean, this is a pretty nice volume profile. There's a lot of volume traded in here, which means that, this was a accumulation zone. A lot of volume traded in here. This was a accumulation zone. What happened when price broke above it? Pulled back and retested that area. What happened when price broke above all this accumulation volume? Look at all the time we spent here. Look at the tiny little volume. All this volume was traded down here. And this here, the most of it, just this little here. That's probably why we pushed up. So now we got our key levels up here and down here. So I mean, now we need to have a directional bias, which is currently to the upside. Well, why? We had an uptrend and we broke trend. You know, it's not a very good trend. We retested the trend and then we rejected. We started a downtrend, and hopefully we don't just put in a right shoulder here and come on down. But if we consider a move to the downside, if we take our swing high to swing low for a measured move like an ABC, if we reject from our current price, oh, value area high. If we look at this pump here, we'll grab it from the bottom, take it to the top, and now let's match it up with our low. We fell a little short, and if we take from all the way down here at our true low to our true high, swing low to swing high, a little closer. Pretty close though. I mean, this was about 50%, and that means that from here to here we came up about 50%. And I bet if we turn on our candles and wicks, I mean, yeah, pretty darn close. Pretty darn close to a measured move. And what did we do? Now let's look at market structure. Have we really broken market structure at all? We came up, we came down, we put in a small imbalance here that shouldn't be ignored. These are this is a weekly chart. Now that we got the candles and wicks on, we're looking at weekly highs and weekly lows. So at the very least, we have a fair value gap down here. This one here closed off very well, but what happened? Price came up and we pulled back, and then we broke this high, giving us new market structure. These are our highs, and has price managed to close below here or get below this? No, it hasn't. Now if price does decide to come on down, our measured move is going to be to this value area high of our current range at about 23K, 23 to 23,250, and then we want price to come back up and reclaim this range and come on up and not come up and reject off of it. Then we're probably coming down and going to retest our last support resistance flip, which is down here at about 18,600. Probably fill half the gap or something. I'm not looking for this. Well, why? Because we had an uptrend that broke. So yes, now we are in a downtrend, but we got a double bottom without breaking structure. We got nice curvature to the price action. Our weekly is slightly optionally biased. We could take the curvature here and we could consider this here as curving to the upside and expecting this to build itself out, or we can consider this the entire wave. Here's our top, and then we consider this little thing here. Well, where would we expect a bottom? Well, right about here. But I mean, we could easily say bottom out here at November or December. It is just follow the curvature down. It's just as likely. We could say this is one big oscillation to the downside. It curved up. You can almost see the circular shape to it. Come on down and put in a bottom. Put a nice rounded, here's one green, one little trigger wave down there. Another wave. We could get this, if this is going to clip off, it would be clipping off in this next week or two. And then putting in a bigger wave to the downside. Now, if we are going to continue to the upside, well, then we would expect price to come on up. We're looking at our current range. So here's our market structure. Here's our last resistance level, flipped into support successfully, double tested. but now we could be putting in a lower high. We did technically have a lower low, but if we take a look at this swing obviously ended because, and here's going to be our temperature check as to are we coming down or are we going up. Am I going to enter a short trade because we got a couple red candles here? Absolutely not. If we start at our high, let's look at our downtrend. We put in a very nice bullish engulfing candle on the weekly and broke this trend. We came down and we retested this trend as support, and when we actually break below this trend, it you know, and we got some trouble. I mean, if we just, I mean, here's our last weekly low. Let's get rid of the oscillator. Is down here. It wouldn't surprise me. I mean, these like to fill in here. It wouldn't surprise me if price comes on down. Look at this weekly high at 27,500 or so, 475. If price comes on down and retests this with a close, you know, where the wick is, where there is no wick and it's solid. A lot of times these wicks like to fill in, you know. Let this let this close price come on down, or we just continue up, you know. Nice big bull flag, because on the close price, have we you know, actually got up here and filled this in? Well, no. So I mean, so I got some more levels up there. I don't know what these are actually on here for. They're from our earlier example with the oh, that was from our Wheel of Fortune there. Our wheel levels. Well, we're going to get rid of those. And let's talk about upside. You know, let's take a directional bias to the upside until we actually, you know, if we just consider this trend on just the close prices, which using close prices is far more accurate than candles and wicks. What has happened on the weekly close with our downtrend? I mean, here our downtrend started, we broke trend, we trended sideways, and then, you know, price can trend up, it can trend sideways, it can trend down. It can trend up, it can trend sideways, it can trend sideways. It could trend up, you know, A, B, C. You know, here's our market structure right here, and our next piece of market structure is, let's go back to our candles and wicks, and just for ease of the eyes, I like to use these Heiken and Shees, especially for any type of forecasting or price analysis, because it's just much easier to see. It gives you the high and the low of the candle, and then it gives you the open and the close. More than good enough. Sure likes that value area price, don't it? Look at 3 weekly closes. 3 weekly closes. But even on the close price, we've broken this trend. You know, we got 1, 2, 3, 4 weeks in the green. Taking the averages on the Heiken and She, so we could have a, here's our market structure. Here's our A, B, so we got A, B, C. Then we cool off a little bit. We could put in this, you know, we could put in a wave 5. This could be a 1, 2, 3, 4, 5. And when I say wave 5, I mean I am referring to the only part of the Elliott wave theory that makes any cognitive sense of any kind. And as far as I know, the only thing that Elliott ever said was that price likes to move in 5-wave impulsive structures. 1, 2, 3, 4, 5. And then it likes to do 3-wave pullbacks. A, B, C. Now you're at a point of decision. What do you got here? You got market structure. A, B. There was your resistance. Flipped into support. A, B. Or, well, this is a 5-wave structure. 1, 2, 3, 4, 5. Here's your This is where your head and shoulders comes from. You think of these as ranges. This is a price range. You know, this right here is a price range. This right here is a price range that it said no to. Came back down and no. Came back into this price range. Just like these big yellow price ranges that we got here. Same thing. You know, so if we think about this on that scale, the only thing of Elliott wave theory that makes sense, the rest is a scam, rip off, something. It's the invention of somebody's foolish mind to make some cash, you know, and it has worked quite well. And you get two people in a room together that proclaim to study and use Elliott wave theory, and they'll give you three different answers, because the only part of it that makes sense is that price when it's very impulsive, and you know, it likes to move in 5-wave structures, you know, or just a ABC. So here you got your wave 1, wave 2, wave 3, wave 4, and possibly a wave 5. A, just depends on where this comes down to. B, C, or maybe price makes it all the way up here and you get a, oh, one too far. Maybe price makes it up here and you get A, B, C, or maybe you just get one of these, A, B, C, and you don't break this structure. Super bullish. A, B, C, corrective wave, but it ends higher. It grows by about 1.5. Whatever this was, this is your measured move. A, B, and your C. Your A and your C should be the same, but being it's super bullish, it grows, and that's what gives you, you know, now when it pulls back, it has this as support. 1, 2, 3, 4, 5. A, B, C. Well, let's do a 5-wave to the downside. Something like that. And that's how you use market geometry. It, you know, I mean, these squares, I'm not going to talk about triangles, because a triangle is nothing. I mean, does it have significance? I mean, I'll hit it very, very quickly, yes, but you don't need to use it. You can just use tape measure tool. It's very simple. There was actually one other thing on this chart here that we should look at, which is time frames and curvature. I think we're actually going to tackle the curvature tomorrow due to the length of this video, and we will look at time frames. Let's get rid of all of our drawings here, but leave our other stuff on there. Trend time. I've gone over it in past videos. There should be a video on Fibonacci time, or the Fibonacci time tool, which is what I do use. You could use the cycle tool, doesn't really matter. There's nothing Fibonacci about it. I actually go in and change it to be cycles of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. When the original setting would be, you know, 1, 2, 3, 5, 8. I mean, you can just use the cycle tool too. I just like the look of this one for some reason, or maybe I see it faster, I guess, I don't know. But I mean, you could certainly use the cycle tool, but I use the fib time zone tool. But first we need to go to the top of our trend. Here's our swing high, our bull market high. Let's draw a trend line down, and you can see here's that high. It broke trend, retested the trend, and then now it's pushing sideways. Anything inside here is sideways. So it'll probably go sideways for a while, then we'll get an uptrend. Maybe. We'll see. Now what we do is we want to cycle the amount of time that it took to get from here to here, where it actually broke trend, out into the future. This is how long it took for this trend to exhaust and push to the upside. And if you want to see how useful it is from the past, go back to the Fibonacci time video, and you will see it's used many, many times. Now we can go right to where we broke trend, and this gives us the end of our next trend, which usually you get a downtrend, sideways trend, and hopefully an uptrend. If we look at this, this puts us out in about April to May of 2024. We take our measured move, go from the bottom to the top. There's our A. Let's say this is all we get for a B. Let's pull her out. And let's put it right on that low. Where's our weekly low? Down there. I mean, I couldn't make this up if I tried, man. I just really couldn't. You know, that puts us at 48K, you know, right at the season change of about April 20th. So, I mean, there is trend time, and like I said, we are going to go ahead and do the curvature on our next video, where we take the circle tool and we'll jump into that with a little bit more depth. But here's the trend time on there, and so I mean, we've shown how we use rectangles and our fixed volume profile tool to get key levels inside this range. We got our time, that price range before it broke out. We've gone through our ABCs, and more than enough for one video. So hey, if you like this content, there is no charge to our Discord. We want to hear from you. Every night at 8 p.m. we have a live, you know, discussion group in there, where you know, I mean, I share my screen. You know, everybody can use their microphones, ask whatever you want. I'm interested in what everybody else thinks, what they're looking at, and applying our analytical tools to whatever we can come up with, just to see how well they function in real time. And let's do it together. You know, come on in and join us. Until then, trade well.